Hey everyone, welcome back to Real Talk with Matt. And I know it's been a super long time since we've done anything like this. It's been 5 months, and there's a reason behind it since our last episode, but life and business has been moving fast, and I've been busy launching my new company, Anchor Home Loans, and still helping families across Florida and the Southeast. But I'm super excited to get back behind the mic and give you some real talk about what's happening in the housing market and the mortgage market as we head into fall and winter with rates, prices, concessions, politics, you name it. We're going to hit it all today. So I'm just really excited. So as you may know, or if you don't know, I did leave Premier Mortgage Consultants after a good maybe 5-year run. And a lot of great things came from that. And I started from, of course, working in corporate America with AT&T and having an opportunity to get my loan officer license. And here we are. I did really a lot of things with Premier Mortgage. And, with the help of Glenn, we built a great company up and just really dominated the market. So nothing personal there. It's just, I have different visions and different goals. And I went on my own, and here we are. So a lot of great things with that coming, and a lot of great opportunities for your buyers out there. So if you're a buyer out there, or one of my realtor partners, or would want to be one of my realtor partners, lots of exciting things coming to you, and with the power of Anchor Home Loans. So we're going to kind of rebrand this and redo this. So now with technology, it's pretty cool that we could do a lot of different things, such as remote podcasting. I'm here in the mortgage cave, I call it, and very excited about this. So, one of the things when you get when you want to be a business owner, especially in the mortgage world, you have to have a dedicated office. And our home is set up with 3 big ass bedrooms. So we didn't have space. And doing some recon and watching TikToks, I saw some she sheds, and I said, wow, I got the perfect space for this in the backyard. We have I think it's like a 20 by 40 foot pad that was already there. So I thought to myself, wow, having a shed office would be really cool. And as you can see behind me, I got the Anchor map up there. To the corner, I got some 2 chairs. I got my nice big desk, lots of windows. I'll throw some pictures in here so you guys could take a look. But it's really, really awesome. I love it. It's air conditioned. We got good electricity, fast internet. And my view is about an acre of the backyard. And it's my happy place. So I'm just very excited about it. But I wanted to talk about the market. So there's been a lot of people out there asking what my thoughts are about the market. And, I think as we go into the end of the 3rd quarter here and going into the 4th quarter, I think it's important to kind of talk about the things that are going on, especially for the people that are on the sidelines waiting to buy, those who have been waiting to buy, and those who have already bought waiting to refinance that. I think we're going to have some opportunities coming up that are definitely going to be good opportunities. And I think it's been a long time waiting that we've all been waiting for these opportunities. And this is what I think is going to be the breaking point. If all goes well, come, the middle of September when the Feds meet, and that's kind of the biggest thing that everyone's kind of waiting for, is what is this Jerome Powell guy going to do with the federal rates, which should hopefully turn down the mortgage rates and obviously borrowing rates. And that's a big thing for people out there who are borrowing money. So hopefully that could all go in a great way. But let's kind of talk about the Southeast region. That's my playground, if you will. So a little bit about Anchor Home Loans. We are licensed in Florida, about to be approved in Georgia, Texas, and a fun one, Tennessee. Love Tennessee. We love Tennessee. So Tennessee is going to be a good one. I know a lot of people that are going there, moving there, who already live there. So those are the areas that we're going to really focus in, potentially Connecticut. We'll have to see about that one again. But that's really what we're doing. So, I think the Southeast is really flipped in a big way. So I want to talk a little bit about Florida first. So I feel like Florida kind of, took the hit first as far as the amount of inventory out there. So if you look at the United States in a whole, a lot of the United States, the market's moving good. You list a house, typically could be sold, I don't want to say 30 days, but probably 90 days or less, where the average in Florida, it seems like it's like 6 months. And that's because I think a lot of people that have lived here have built enough equity up, which is good. Either they own their house outright, but they're really getting slammed with the insurance. Insurance is a big thing. I just got a quote for one of my buyers, and on the other coast in Boca Raton, and not a very old house. I mean, the roof is a little old, but the insurance quote was like $10,000 a year. I'm like, holy smokes. And there's not many carriers, depending on what side of the state you are in or what part of the county you're in, within Florida. But that's a big factor there, and that's really hurting a lot of our retirees and people that have moved to Florida because of the cheaper cost of living. But with all the hurricanes and storms that we've gotten, it seems like it's getting more expensive. So, when we talk local, I think, as I said, it flipped in a big way. Florida was once one of the hottest markets in the country. I think it still is. Everybody I talk to is usually typically from the Midwest, New England, and sometimes out on the West Coast, and they're looking for change. And I feel like they really like the Florida market because of, we'll call it the freedoms. We have a great governor, and we critically think in Florida, I think, compared to other places. But our weather, obviously, in the summertime is extremely hot right now, and very, as we go into hurricane season, there's a lot of iffy-whiffy there. But compared to the rest of the United States, pretty soon as we go into fall, leaves are going to start falling, and then winter, snow is going to be falling, and we're going to be still sitting here with flip-flops and shorts on. So that's reality. But I think right now it's starting to turn cold or colder. And according to Zillow and other housing reports like Business Insider, places like Northport, Sarasota, and parts of Miami are seeing homes sit longer, sellers cutting prices, and a ton of concessions on the table. I have this one deal, and there's about $70,000 in seller concessions. 70. That's a lot. And I'm not complaining because I feel like it's great because we're buying down the rate as low as we could go on the rate table, getting all the closing costs covered. There's a lot of fun things that we could do with it. But, Georgia is starting to take that turn too. And I've talked about this before. We thought about moving up to North Georgia full time on a lake house, and some of them are still sitting on the market and spending over a year. And a lot of them, you look at they go pending, and then when they close, you can see what they close for. And some of these houses are closing 200, 300, 400,000, what the ask price was. So I think the reality is a lot of things are starting to change because as we go into a norm, right? Like COVID rates, I call them COVID rates, they were a norm. When rates started going up, people were freaking out. Well, right now we're kind of like where almost kind of was before COVID. Rates are FHA could be as low as in the 5s and conventional in the 6s. So we're getting there. It's going to take a couple more bumps down to get kind of to that normalcy, I think. But, I think a lot of things are starting to catch on in other places now. And it's kind of like going back to when the housing market crash happened. Florida, like everyone was just foreclosing on their homes because it was a thing. And I lived in Connecticut at the time, and I'm like, what the hell are people doing? Why? But then it started catching up. But I think the biggest thing right now is if you're a buyer out there and you don't have a contingency to sell your home and you're a renter or living at home with family, you could get the bomb-ass deal right now. You could get such a good deal. You could get money off the house, get all your closing costs paid for, and probably enough money to buy down the rate as well and make it a really sweet deal, And that's why when I talk to clients, I'm like, well, like, what's your timeline? And they're like, oh, probably next year, early next year. I'm like, why? Like, what's the point of waiting? If rates go down, and I'll tell you this, if they go down, for every half a point, you're probably looking at 5 million more buyers in the country who are now eligible to buy at a higher price point for what the same cost would be monthly at a lower price point. And that number is just going to keep going up. And when it goes up, then you're going to have a squeeze again. And then the seller's going to be like, oh, I don't have to drop my price. Oh, I don't have to give $1 million in seller concessions. Oh. And those are things like, I know it might be tough now, but if you can stick with it just for a little bit, and I tell the story to a lot of my buyers, is I've never bought a house ever at a low rate, ever. The house I'm in now, I think I was at 6% and mortgage rates were 2 or 2 to 3. I had to do a business bank statement loan, but no big deal. I refinanced it and I got my 2%. I've always refinanced into a really good term and rate, but I've never bought one. And I always say the rates, yeah, it's a factor. But don't let it be the factor to lose a house because people refinance on average 2 to 3 times within a cycle of the ownership of the home. Okay. But the big message is buyers have a lot of room to negotiate now and they have a lot of options. So if that deal doesn't work out, guess what? You could go find another house and probably another one just like it. So I just want to keep that out there. But let's talk kind of about the Fed. So, in rates. So just recently, the 30-year mortgages, and this is just an average. A lot of things depend on that: credit scores, down payments, debt to income ratio. But the 30-year average dropped about 6.58, which is the lowest level it's been in 2025 so far, according to the Wall Street Journal. I've seen them lower, just depending on situation. I've seen them higher based on situations, but that's just the average. And I think going to my last podcast, which was probably like May of this year, rates were probably like closer to 7.25%. So that's a good drop. And that difference in a half a point could be a couple $100 a month. So think about that. Okay. But let's keep it real. I just don't expect rates to fall off a cliff. And I tell this, it's a slow moving train. Most projections have us kind of where we're at from the beginning of this year, where we're at now. But I think the biggest thing is I think it's September 17th when they have the Fed meeting again. I think based off of, different Goldman Sachs, JP Morgan Chase, and others are predicting, they're going to probably cut the federal interest rates, I think, a couple times. And I think the first one's going to be big, maybe a half a point. Keep in mind, because I get this question asked all the time, it has nothing to do with mortgage rates, zero. However, it's good news. When we have good news, it usually trickles in. I think if they're really thinking like a higher than 95% consensus between all the different people that there's going to be a rate drop, I feel like the mortgage rates are going to drop probably in the next couple of weeks because we already bake them into the prices. So with that said, I think pressure is mounting, inflation's cooling, which is good. And even Trump has been very vocal with Mr. Powell about that, and they need to cut faster. And it's too late, Powell. Everything's too late, which I think is a lot of political crap in there. Because for the Biden administration, it feels like they were doing whatever the heck they wanted them to do, so they would stay in there. But I feel like, Trump's winning. The economy is doing good. Prices are coming down. The United States is making money. There's no flipping reason why our interest rates are still up high. There's zero. And when you talk about affordability and risk, the affordability crunch is still real. Moody's economist Mark Zandi even warned that high rates near 7% are putting major stress on housing and could even weigh on the entire economy, which is very, very true. And I'm talking to people now that I've closed already, and they're trying to refinance because it's like, all right, it's been 2 years, 3 years, whatever it's been, 4 years, and that payment's getting hard. Like, it shouldn't be that expensive to borrow money, and it's really putting a damper on Americans out there, okay? But we're seeing inventory build, sellers adjust, but demand hasn't surged yet, okay? Builders are still offering lots of discounts, in my opinion, too many discounts. And in many metros, homes are lingering longer, which we all know, which gives buyers an edge, but only if they move strategically, which I think strategy right now for buyers, sellers, and realtors, there's a lot of things you got to look at. So for buyers, I don't think you should ever sit around waiting for 5% rates. It may never happen, okay? And it may not happen soon. You got to use the leverage you have now to get the concessions for rate buy downs and better deals. And I always say this, when you're putting an offer on a home, it's not about the price necessarily, because I had a good conversation yesterday with a client. I said, why would you offer $50,000 less to save $60 or whatever it equals to? Why don't we offer somewhere in the middle so you get the house and not insult the seller on that, and then get the other half in concessions, or enough concessions to pay for your closing costs and to get the rate down maybe 1.5% in points. Just by doing that alone, that saves $300 a month. And if we do it permanently, it's forever if rates never get better. Not the temporary buy down stuff, which I think is okay for a Band-Aid. But the thing is, it's like, all right, if rates don't really change, then you're at that indexed higher rate that's locked in instead of your 2% lower, 1% lower. Because those are, for a lot of people, when they kind of came back, their time has ran out. Now they're at the fully indexed rate and rates didn't really change. So it's kind of like, all right, for the first 2 years, lived good. But, those are things you got to look at. If you're not in a situation where your realtor is fighting to get you discounts and or seller concessions, I think you got to revisit that and have that good conversation with them, because there's no reason. Like I would say, even this month, I have $4 million in loans closing, which is about, I think it's 8 families. Every single one of them, I think but one, has a ton of seller concessions. Like, it's blowing my mind. Okay? You need a strong realtor in this market. It's not the Vanna Whites anymore. Let me go show you a house, put on an offer, it's COVID, all right, bye. You need a really good negotiator, and you need a great salesperson to be on your side, period. Okay, and if you don't have that, it's going to impact that experience for you. And then when you go talk to your friends who just bought a house, they're going to be like, oh, you didn't get your closing costs paid for. And certain homes and certain prices are going to vary on that, but it's a thing, okay? 100%. So for sellers, you got to be realistic out there. Price your home right and expect the buyers to ask for help. If you're not in that mindset, take your fucking house off the market. I'm just telling you right now, because your house will sit there for a year. You're going to get offers that are probably closer within that gap. And if you don't take it, you're just wasting everybody's time, including your own. Just take it off the fucking work. Just do it. It's annoying. It's frustrating. I went through it. And the houses that we put offers in Georgia, guess what? I would say 65% of them are still in the market. And just because over time, all we wanted was some time. That's all. Time to sell our house. No, we don't have time. No, don't have time. And here we are, a year later. Still in the market. Oh, well, your loss. Our gain. I have a cheap mortgage right now. We're perfectly happy. But I think you need to work, as a seller. I think your realtor that's representing you really needs to probably partner up with a good lender too to make sure that we could orchestrate all this good stuff. So that way the deal works for everybody. It's a team game right now. I don't know why people hide secrets and don't want to tell their whole story. Tell the freaking story. The story helps create the transaction and get the transaction to the finish line, period. And the last part is realtors. This is where partnerships extremely matter, okay? Having a lender who can help craft strategies, whether that's a buy down, creative underwriting, or fast closings, can make or break deals right now. And at the end of the day, this market isn't about waiting, it's about strategy. And maybe that's why I'm successful. I don't know. I'm killing it. And it's just because I critically think, okay? And there's a lot of people that come up to me and they're like, I don't understand how you're doing it. I don't understand this. I'm like, well, maybe we should work together and maybe we could run things off each other and make it work. Like when my good realtor partners that we are consistently getting buyers pre-approved and under contract, don't you think there's a reason for that? There's a lot of loan officers out there, but I will tell you this. There's a lot of them that have no clue what they're doing. And not only that, they work for a company with one option and that's it. It's like, da-dong. And I don't have 60 lenders. I have maybe 10. But they're the 10 I've always used for the last 5 years. That I've successfully closed 700 plus loans with over the last 5 years. So I would say my takeaway here is work with a good lender. Work with a good mortgage broker that has options. Don't work with somebody with a one option deal because they're going to get smacked around if that buyer goes looking or asking around or shopping. I think I've taken 3 deals out of the bunch I have right now because that bank, that mortgage loan originator, just getting crushed. It happens. It's okay. Not my problem, but realtors, you got to be smart out there. You got to be real smart out there, and you got to be a go-getter. You got to work with the right people. Otherwise, your circle is just not going to work. You're going to have an open end somewhere else, and things are going to leak out. You got to keep the things tight. So I'm going to give a shout out, though. My realtor partners, you know who you are. You know who you are. You guys are awesome. You guys are awesome. You guys make things happen. We make things happen together. And then our buyers are so freaking happy that they go tell everyone they know and we just get more deals. So it's an easy win for everybody. But I want to wrap it up. So, I mean, that's kind of the market where it's at. I think everyone knows. I think everyone's in anticipation over the next couple of weeks what's going to happen. To me, I really don't care what happens. It is what it is. It could go both ways. But we have lots of great deals that we're doing, and I'm going to talk more about those on Thursdays with Real Talk, just market updates and stuff like that. But I want to give everyone just a high-level overview of what's going on in the market because I think it's important. The Southeast, obviously the market's cooling, which means more opportunities for buyers. If you don't have any contingencies in your renting, please just reach out to me. Reach out to me. Let's talk. Let's get a game plan together. I think it's really, really important to do that so that way we can prep you up and get you ready. It's not that hard. Getting approved for a mortgage is super easy. I'm telling you, it's way easier than buying a car. And that's sometimes a pain in the ass. I've done it many times. Right now our average between submission and clear to close is like 8 days. So sometimes I get a contract that's closing in like October. I'm like, why? It's too long, but I get it, but we get everyone wrapped up real quick. The other thing, too, is just let everyone know, with certain lenders, when you're at the top 1% in the country on originating loans, you get perks. I will tell you that. I'm on special rate sheets, which means if you go to Timbuktu over here with the same lender and I'm over here with the same lender, my rates are going to be lower. Just saying. More perks. It's just advantage of, having a good team around you and working with great people. So just throwing it out there. But I think our rates are likely going to stay where they're at. They might drop a little bit. It's not going to be a landslide. It's going to take time. The winners this fall and winter will be the people who move smart and not the people who sit on the sidelines. And I say it all the time. If you are sitting around like, oh, how can I get more business? You're not doing the right task. Like, you have to do things. You have to do things every single day. Marketing, talking to people, engaging with people, going to meetings, doing coffees, whatever it may be. So those are things there. I'm going to wrap this up. This is a new program I'm using. I can invite people to do this. We could all do it virtually. I'm super pumped up about this. So I'm going to edit this and see how it goes. But hey, if you're interested in maybe joining and just talking real estate, we can talk about anything you want, coaching, circles, rates, housing market, mortgages, whatever you want. Let's do it. I'm excited about this. I will say this. If you think about buying or selling, or if you're a realtor out there trying to navigate this shift, just hit me up. I love to strategize with you. I'm very busy all the time, but I will always make time. So just please hit me up. But I appreciate you all. I'm excited to get this back. We're going to upload this. We're going to get it out there. And I'm excited for the fourth quarter. And I will tell you this, with my new company, we are pushing deals, undercutting things, like different rates from different people. Like, if you want a free rate quote, give me a call, give me a text, email me. My information will be down below. And again, this is Real Talk with Matt. Don't wait for the perfect market. Make the moves now. Let's dial it in.